Business owner, are you overpaying taxes? How to legally keep more of your money? Have you ever looked at your tax bill and thought, why am I paying so much? Most Canadian business owners are overpaying on taxes every single year. But what if I told you you could legally reduce your tax bill by using the right strategies? The government won't tell you how to optimize your taxes. But after 20 years as a financial planner and working with business owners across Canada, I've identified the top 5 things you need to know to keep more of your hard-earned money. If you're new here, my name is Charles Lacalzi, Associate Investment Advisor at Zenith Private Wealth, IA Private Wealth, specializing in tax planning and wealth management for business owners. My goal is to help you to grow, protect, and keep more of what you earn. Let's dive into the 5 things every business owner needs to know to stop overpaying on your taxes. How business owners are taxed, why you're probably paying too much. One of the biggest misconceptions business owners have is taking home more income automatically means paying way more tax. It's not entirely true. In Canada, we have a progressive tax system. This means the more you make, a higher percentage of tax you pay, but not on the entire income. Think of tax brackets like buckets. Fill up at the lower tax buckets first, and then those are full, only the overflow gets taxed the next bracket. For example, let's say your business pays you $100,000 in salary. First chunk is taxed at a lower rate. The next portion is taxed at a slightly higher rate. The final portion, depending on your province, is taxed at the highest rate you qualify for. So when someone says, I don't want to make more money because I'll pay more tax, what they really mean is that they don't understand how tax brackets work. Here's where business owners get the advantage. You can control how you get paid. Unlike salaried employees, you can use strategic income planning to keep your taxable income lower while still accessing cash. I'll explain to you in a sec. But first, let's talk about how tax refunds really work. 2. Why some business owners get big refunds and you might not want to be one of them. Most employees get tax refunds because their employers withhold too much tax from every paycheck, which is basically an interest-free loan for the government. But as a business owner, you don't have an employer deducting tax for you. So if you're paying too much in installments or failing to claim deductions, you could be missing out on refunds or overpaying entirely. Here's what you need to know. Avoid overpaying in tax installments. Your tax goals should be strategic and planned, not just whatever CRA suggests. Are all business deductions property? Every expense that helps generate income could be reducing your tax bill. Split income wisely. We'll talk more about this later. This is a key for family-owned businesses. Now, let's talk about the biggest legal tax saving tool available to business owners. 3. The corporation advantage. Why you shouldn't take a full salary. If you operate your business under a corporation, you have one of the best tax saving tools available. Income deferral. Unlike employees, business owners can choose how much to pay themselves. Your corporation pays tax at a much lower rate than personal income tax, which means keeping money in the business saves you tax. Here's a simple example. If your business makes $200,000, but you only take home $80,000 as a salary, you only pay personal tax on $80,000, while the rest stays in your company at a much lower tax rate. If you have a lower income spouse, you can income split through dividends or salary to reduce your overall tax bill. Keeping income inside your corporation and paying yourself only what you need, you can save thousands in taxes every year. What if you don't want all of your money locked up in your corporation? That's where smart investing inside a corporation comes in. 4. How to invest inside your corporation without paying excessive tax. One of the biggest mistakes I see business owners make is leaving too much money sitting in their corporate bank accounts. Your corporation has too much passive income, you could face higher tax than your active business income. This is called the passive income grind down and can drastically reduce your small business tax rate. Avoid this. Use your corporation's retained earnings to invest in tax-efficient assets like corporate-owned insurance, passive real estate, or tax-efficient investments. Create an individual pension plan or a retirement compensation rate. Move money out of your corporation tax-efficient. Use capital gains instead of dividend. Capital gains are taxed at a much lower rate than dividend. Structuring your investments properly to reduce your tax bill significantly. The goal here is to strategically invest inside your corporation to maximize your wealth while avoiding unnecessary tax. Number 5. Income splitting and family business strategies. If you have a spouse or children over the age of 18, you may be able to split income legally to reduce your overall family tax. 3 ways business owners can income split. Paying family members a salary. If your spouse or child does legitimate work for your business, you can pay them a salary and shift income to a lower income bracket. Number 2. Dividends to lower income family members. If they own shares in your corporation, they can receive dividends which are taxed at a lower rate than salary. 3. Spousal RSP contribution. Instead of maxing out your own RSP, contributing to a spousal RSP lets you reduce taxes while shifting retirement income to your low-income spouse for later. Properly structured family business strategy can help you save thousands in taxes every year while keeping more of your wealth within your family. You're a business owner, you're not using this strategy, chances are you're paying way more tax than you should. The reality is, tax planning isn't just about saving money this year, it's about building wealth strategically so that you can retire comfortably, invest tax efficiently, pass more your income to your family. If you want personalized strategies for your business, feel free to reach out. I take care of your wealth so you can focus on growing your business. If you got value from this, hit the like button, subscribe, and leave a comment with your biggest tax question.